Hello and welcome to NDTV Profit. You're watching IPO and the company in focus today is EPACK Durables. The company is the second largest manufacturer of room air conditioners and original design manufacturer, which has facilities across Dehradun, Bhiwadi and Sri City. And joining me is Mr. Bajrang Bothra, who is the chairman and whole-time director, and Ajay, Singhania, who is the MD and CEO of the company. Gentlemen, thank you very much for joining us on NDTV Profit. Let me begin with your IPO, which is currently open, is priced between 218 to 230, and fresh issue of 400 and OFS of 240 odd crores. So total IPO size of 640 crores. Please tell us the 400 crores which you are raising through fresh issue, or what is it going to be used for?
Yeah, good morning, Sajid. I think thanks very much for giving us an opportunity to talk to you and through you, your viewers. Just a quick background of the EPACK Group. It's a partnership of two families, Bothra family and Singhania family, and we are together for last 47 years. When we say 47 years of togetherness, it speaks about transparency, ethics, value systems, trust, corporate governance, and the DNA of alignment. So we have been growing with the best customers in the business. We have the best of the top 7 out of top 10 customers in air conditioning space, and similar is the count in appliances space also. So we feel that the best one keeps us evolving regularly, and we keep on improving, and they bring in huge value to the table. And then, of course, stakeholder value enhancement is our key focus area. Because of this, we are continuously focused on R&D efforts, cost reduction efforts, value engineering, and diversified product portfolio apart from air conditioning in the appliances space also, so that we can increase our asset turn. Having said that, the present issue, this issue is 400 crores, of course, the fresh issue. So out of which 230 crores will be, plowed back in the company for increasing our capacities further beyond FY25, because as the present capacity is, of course, covers us for our targets up to FY25, but beyond FY25 also we looking at the humongous size of expansions beyond 25 also, the market is going to grow substantially. So we have to keep ourselves ready. So because of this, we are have to infuse 230 crores up to 400 crores. 80 crores will be used for paying off our long-term debt, and the balance is for general expenses.
Mr. Singhania, give us a sense of the kind of market growth that you're seeing, especially in ODM. You cater to nearly top 10 players in the market. What is the kind of growth that you're seeing in this market?
Yeah, so see, currently the AC market, I mean, the penetration is so low in India. We have just 8% penetration per household, which compared to global average of 42 is way less than the global average. So, like you likely said, there's a humongous scope for the market to actually explode. And looking at the current way the economy is growing over the last 3-4 years, at 12% absolute growth in the economy, the market is projected to grow at another 12% CAGR. So we are seeing a huge market opportunity in front of us. And on top of it, the outsourcing percentage is actually increasing year on year. So outsourcing increase is going to surpass the market growth. Currently, the outsourcing market is close to 32 to 35%, which is expected to become almost 40 odd percent in the next 5 years. So the OEM growth will surpass the market growth, and definitely we being in a leadership position here amongst the top, being the second largest, definitely stand a good chance to outgrow the market.
What is the kind of margin profile that you get in this market, sir? Because you are producing for some of the biggest, manufacturers or branded players, and I was seeing your H1 margin. It was coming to around 6%, which has fallen from 6.7% in FY23. So, what is the kind of margin profile that you work on, and what are the levers that can push the margin profiles higher?
Definitely. Yeah. See, average margin over the last 3-4 years have been within a range of band of 7 to 8% on an annualized basis. So that's the typical margin for an air conditioning manufacturer on an annualized basis, between 7 to 8%. But there are a couple of things which the management is aware of, we are aware of, and working continuously to improve. So like currently almost 80% of our dependence is on air conditioning, and only 20% on the small domestic appliances and the non-AC business. So since AC is a highly seasonal business, we understand there's a huge opportunity for us to utilize our asset turn, improve our asset turn, utilize our assets better during the off peak of AC season. So we were working on a lot of other appliances in non-air conditioner segments like coolers, washing machines, then small domestic kitchen appliances. So a lot of these appliances are under development, and some of them are under very advanced stage of development, which will definitely help us when improve our asset utilization. And once the asset utilization improves, definitely the off-peak 7 months when we kind of literally we can say that a lot of margin which is accrued during the previous 5 months get bled into those 7 months. So that is one very high focus area for us, is to improve our asset utilization during the balance 7 months. Second area of our focus is improving our working capital cycle. So we are continuously working on improving our working capital cycle. In last 2 years alone, I mean, from almost 120, we reduced it to 19 FY23, and as of September, you can see we improved it to further 60 days. So I mean, we've improved our working capital cycle by almost 50% in last 18 months. So that's another key focus area for us, is to continuously work on our working capital cycle. And most important for us as an ODM is to continuously work on our R&D. So see, as an ODM, we just don't assemble the final product. We are design-led manufacturing industries company. So we design, then we manufacture the components, and then we deliver the final product. So there's a lot of focus on uh, improving our bill of material by way of design, and developing newer and more innovative products, which will definitely help us improve our margins. So three levers for us, like I said, is asset utilization, asset turn. Second is the working capital, and third is our R&D focus.
Give me a sense of your profitability as well, because I'm seeing 32 crores of profit for FY23 and 2.65 for the first half. Why is this differential profit? Is there a seasonality to it, or certain additions that you have made in FY23 you haven't done it in the first half?
See, again, on an annualized basis, like for the calendar, for the financial year 23, the margin was closer to 2.5%, the PAT. And for the 6 month ended, like, I mean, this doesn't depict uh, the right mix, because it is here in the H1, the first 2 quarters, we had only 2 months of the AC season, April and May, and then the lean season starts from mid of May itself. So for us, the key months for AC business, especially, start from December, January, February, March. These are the 4 months for us wherein most of the top line, bottom line comes. So these 4 months are more critical for an AC manufacturer. And at the same time, like we were discussing, we have added a recent facility in south of India, in Sri City, wherein we have increased our capacity by almost 50%. So our earlier capacity was almost 2.45 million units of air condition. Today, as we talk, our capacity is already increased to 3.7 million. So we have added another 50% capacity by this new plant in Sri City, for which the key months of utilization have just started.
The PLI is coming from the Sri City facility?
It's applicable across the all the three facilities.
Okay,
So we
so
have PLI benefit in all the three
give me a
facilities.
sense of, uh, I was looking at your RHP and you mentioned there that you had applied for a grant of 15 crores, which you have recognized in FY23. And that's what is coming to 31 or 32 crores in profits. But it seems that you haven't done that in the first half of the year. Why is that?
Yeah. See, PLI incentive in the previous financial year, FY23, was accrued at 15 crores. So last year being the first year of disbursement, there were certain procedural delays from the government side, which now most of it are sorted out, and the government just came out with a circular promising that disbursement will be done before end of March 24 for the previous financial year. So our benefit amount was, like you right, is it 15 crores for the last year. For this year, the benefit is going to be almost 30 crores. So the benefit is linked to the investment. So for last year, we were supposed to do an investment in 22 or 50 crores, achieve an incremental revenue of 250 crores, 6% of which 15 crores was the benefit. For this financial year, last 2 years put together, the investment was supposed to be 100 crores. 5 times the revenue, 500 crores, 6% of it, 30 crores. So this year it is 30 crore. Next year, again, there's an incremental investment, incremental revenue, and incremental PLI. So going on this way, we are supposed to do 50, 50, 50, 75, 75, totally 300 crores of investment. against which in 5 years the total incentive is going to be almost 230 crores.
So you haven't accrued the profits or PLI incentive in FY24 so far, and that's why it's showing that way.
Yeah, for this year we will do it in the end of, in the March end.
Okay, in the fourth quarter, and the payments will come in the next financial year. Is that how
Yeah,
it is?
yeah,
Yes.
absolutely. And we are hopeful that for the next financial year, the payment should come probably within a shorter span of time as compared to this year, because this year was the first year, so definitely there were some procedural delays.
Because we have seen many of the companies accruing the incentives, but the government is not recognized the extent of the entire incentive sought, and they had to reverse this going forward. So, have you got an approval from the government on the kind of incentive that you sought?
Yeah, yeah, we already have all the approvals in place.
Okay. Mr. Bothra, give us a sense of how the production capacity will look like once all the investments come through. 230 odd crores spread over next few years. Mr. Singhania spoke about that. The investments have to be made over a period of time for next 3 to 5 years, and that's the kind of incentive that you're going to get from government as well. Once this entire investment is put in place, what is the total capacity increase that will happen?
Yeah, see, the present capacity is 3.6 million units of air conditions. Dehradun, Bhiwadi, and Sri City put together. And this is, this is good enough to meet our targets up to FY25. But since, as explained to you, that we are seeing a humongous growth in the air conditioning segment is going to explode, we have to build up capacities further, because building capacity also takes 12 to 18 months time. So once we go for expansion and do the investments, of course, over a period of 10 to 12 quarters, our capacity is increased to by another 2.4 million units. So it becomes 6 million units plus.
The breakup of the product portfolio that you have between room air conditioners and the small domestic appliances, is it going to change going forward? I understand that margins are slightly higher for domestic home appliances as compared to room air conditioners. So, what is your game plan there?
So you see, the good part is that when we say capacities, we talk about air conditioning capacities, because when we go for manufacturing of appliances, that's a game plan of our company, that we have to make our assets turn increasing more and more. So that's why we are developing small appliances and going forward for mid appliances also, so that we can utilize our assets during the off-season period. Our air conditioning business is 6 to 7 months market, and we have lean period after that. So once we see, all those assets which we invest is all fungible assets. So most of the assets are used for making appliances. Only maybe that heat exchanger is not used, but otherwise all assets are getting used that. So when we talk about capacities, we talk about air conditioning capacities, and then of course for making appliances, capacities available to us.
You have a long relationship with most of the top companies in this space, but why is it that you don't have long-term agreements with them?
This is how
Sajid,
the ODM space, behaves. Our average stickiness of our customers is 8.5 years. So that's a long period, because the customer will stick to us, if we can deliver good quality, good delivery, and our fill failure ratio is satisfactory, then only the customer keeps on giving business to us. The ODM space, there is no such agreement in place, but then the relationship works, and our delivery and in terms of quality and all that works. So that long-term agreement is not in place for any of the ODM as a industry as such. This is a normal practice.
Yeah, but ODM also means that it gives you yeah, gives you the intellectual property and the R&D which you are spending on a product, and you can leverage it much better. Won't companies be more interested in locking in those technologies or IP, so that they can provide better products compared to the competitors?
You
Sajid,
see, yeah,
let me
please.
add here. Yeah, Sajid, see, one EPAC is a ODM, like you rightly said. So herein, what we supply to our customer is a complete design product, wherein the IP for the product design, the project engineering is with us. Now, with a track record of, with an average relationship of 8.5 plus years of relationship with the top clients, there is a certain amount of very high lead time when it comes to entering into a relationship with our customer. especially when they are the leaders in the industry. An average gestation period just to enter into a relationship is nothing less than 12 to 18 months. So when wherein an 18 months of time is spent in jointly developing a product, there is definitely an informal understanding and a stickiness, by virtue of which you can see that we have continuously grown with the top brands in the country. So, I mean, a written agreement here, I don't think plays much of a crucial role, because agreements are not which give business. It is more of your old standing relationship in which you have both grown together. So there's so much of interdependence. And second, you can see that way the OEM ODM industry is structured currently. It's a 3-4 player industry. So it's not a crowded manufacturer, wherein we have more than 30-40 players competing against each other, and the market is growing. The ODM growth is surpassing the market growth, so there's enough room for each one of us to grow. So, I mean, we don't think that any agreement will give us any benefit. It is our manufacturing capabilities, our strength to deliver the products and continuously innovate, basis which we have shown the results in the last 3 to 4 years. So definitely, it is more of the our capability to deliver the right product at the right time at with the desired quality levels, that has given us the results. And going forward, that's our strategy. We continually want to focus on R&D and deliveries, and ramp up the capacities ahead of the market.
How do you manage the pricing in that sense? Because if it's a PO based order book that you have, how do you manage the pricing? Because a PO based order book will have competitive pricing coming in, right?
So it's not exactly PO based, Sajid. It is, we will say the relationship for ODMs in air conditioning is season based. So before the starting of each season, we have an annual projection from each customer, each of the key customer in front of us, and we allocate them capacities. So once the capacities are allocated to customer, it is that is for the entire season, and the pricing is also more or less decided for the entire season, with a clause that any fluctuation in commodities, because commodities are out of our control. So any change in, let's say, LME or foreign exchange is passed on every month or every quarter. So there is an adjustment in terms of commodities and exchange rate. So we are safeguarded against any unforeseen events in case the crude goes up, or let's say the LME falls or increases. So that's the way the relationship is structured in this industry.
My final question to you is, what is the kind of order book you're sitting on for FY 24-25?
See, I'll put it in this way. Last year we started a facility in Bhiwadi, and we increased our capacities. Our capacities were kind of sold off. This year we've added additional 50% capacity recently, only in last month. And what we are looking at in front of us is 5 to 6 months of peak season time. So we feel that the capacities which we have set up has come up in the right time for us to be able to utilize during the this 5 6 months of peak months for AC manufacturing.
Okay, gentlemen, I'll leave it there. Thank you very much for joining us. Your IPO is currently underway and it closes on Jan 24th. It's a fresh issue of 400 crores and OFS of 240 crores, price between 218 to 230 rupees per share. Thank you for watching NDTV Profit and being on IPO.